Hey everyone, welcome to another video. We're doing another trade recap. It's December 22nd. It's Wednesday. We're just a few days away from Christmas. Meanwhile, many of you guys have probably been told that trading during the holidays is a mess. Don't do it. The volume sucks, whatever. So much negativity. The reality is beautiful setups are presented every single day. You might just be looking at the wrong time frame. If you know how to interpret price action, if you know how to read what the chart is telling you, you will always find a beautiful setup. I'm going to show you guys how I banked 60 plus R on London session in just 3 hours or so, and how my setup continued to run and hit over 200 R. I did close out at 60 in the high 60s because I go to sleep and I try not to leave trades running while I go to bed. So I like to take my profit and have a peaceful night's sleep. In this case, it did continue running. Price was amazing. It exploded and we did get over 200 R in potential with these setups. I'm going to show you what I was thinking when I was looking at the chart, how I got these setups. This video is going to be full of lots of sauce, lots of gold nuggets. This is going to be something that you definitely want to watch all the way through. I'm going to try to not keep it super long like my other trade recaps, but the reality is that this is going to be a really good trade. We're going to go over 4 different entries that I took, and just to give you a hint on what we basically did here is we basically took refined, untapped, unmitigated 5-second demand zone. We waited for a reaction to that 5-second demand zone that respected and held. We waited for change of characters on the 1 minute, and we got 4 different entries that were all beautiful, all worked perfectly fine, no losses, 4 straight wins today, and it's just beautiful setups. So let's get into it, right? So we're going to start on the 4-hour time frame. The 4-hour time frame, we have this high, we have this low. Last night price was in this zone before we rallied up, so as you can tell, we've got the rally up, but this is where price was around last night, right? So here we are. We had this high that pushed price down. We had a candle body closure below this area that still kind of in a way made a new low, right? This wick wasn't taken out necessarily, but we did get candle body closures below the previous body candle closures, so somewhere in here, right? So this was a pretty strong push short. This had previously respected a demand on the 4-hour time frame. So you can see that price very aggressively had pushed up here. That's where we had sponsored candles here. This took out previous liquidity. You'll see that in trade recaps of yesterday's trade recap. If you end up watching that one, that was, I think, 46 R or something like that for yesterday. Today, this is going to be the 60 plus R video. Here, what happens is we did get a push down. But notice how the wick did not take out the previous low, right? There's still the candle body closure, did close above the previous open. The wick did not push below. So this was still pretty bullish, right? It was only until this point here that we ended up going short. So we had a last push up, another candle that was pretty strong, full body candle closure, took out liquidity internally here, did not take out the external liquidity. What did it do? Mitigated something in here on a lower time frame, and this is where price turned around. It rolled over. Momentum was injected very aggressively. You can see how the candle bodies are getting bigger with each one until we get to this price right here. This is where price comes to a dead stop. We get 4 hours that we're just creating an internal range in here as a doji candle, as what it appears. And from here, this is where the reversal comes. Price decides to push back up. And so we have 2 things that are happening. While we were trading yesterday, this is basically what we were seeing. Let's bar replay that just so you can see. Here's where we were hovering, right? So at this point, we had a couple things we were looking at on the 4-hour time frame, right? We'll get down to the 15-minute, you'll see more clearly. But on the 4-hour, we had an aggressive push down that did not really take out the previous low necessarily, but did show strong bearish momentum, right? Then we did get a push back up. The question is this going to be a weak push back up that's just going to mitigate something in here above the premium level, which is this is the 50% zone? So was price just going to give a push back up to mitigate something before it drops all the way down, right? Yesterday's video I did say that my expected case of what I think is going to happen is I do think that price is going to go short somewhere in here, and then what we're going to do is we're going to make new lows. That is my expectation, right? In the case, that's kind of what I was looking for. I was looking for shorts, right? Now, I'm looking for shorts from specific zones, and that's what we're going to get into, right? We don't want to take it from no man's land where there's no price is not in where there is. I don't want to take a short unless we are at premium, right? I don't want to take a buy unless we're at discount. So at this point, we did penetrate through to premium price territory, but we had not yet mitigated anything that was a strong supply zone that indicated we should go short. So last night I was looking for potentially any indication that we were going to pick a direction to go into, because we're just in the dead center pretty much, right? And as you can see, we did end up going long. So let's go to the 15-minute. It'll be a lot more clear there. Let's turn on the 15-minute chart and full screen this. All right, so I took the liberty of labeling a lot of things so that you could kind of get an idea of what's going on. So if we're going to start with the left, this was a 4-hour supply zone, right? And in here, there were a lot of areas that I was interested in looking for shorts from, right? I was looking for shorts from these two areas, and I believe that in yesterday's price action, I did mention that in the trade recap, right? But in the meantime, because we were here, this is where we were hovering around last night during Asian session. I think Asian session made covered from here to here, something like that. So all this was Asian session moves. So when I got to the charts, we were somewhere right around here. And while I was looking for shorts in these zones, before we get to the price up here, I was still waiting to see how are we going to behave internally, because as you can see, we were creating a supply chain, right? So if we go from the very left, we have a 4-hour supply zone. We have a 4-hour demand zone, right? What happened here? Basically, we're taking a look back because this is where we were trading. We wanted to understand what's price been doing up until here. We're trying to build a story. If you don't understand what price is doing and you're just looking at price, like let's say a naked chart, how can I hide my stuff here? Hide drawings. If you're just looking at this, you're going to be very confused at what you're looking for. So if you're just looking at this area right here, you don't necessarily know if we're going to go long or going to go short. That's why it's important to build your story, right? So what do we have? Price here on the 4-hour, we see price is pushing up. We had a supply zone that created this push, the last push down to the low. These two zones, these 2 point of interests, were at the discount part of the leg. So we wouldn't necessarily be looking to take the shorts from here to get price to push all the way down for new lows. What we'd be looking for is more pullbacks, right? So because this is not in a premium zone, we're looking more to see how price behaves here for pullbacks. In this case, we both got 2 flip opportunities setups that were very clearly set up on here. So price reacted to this 15-minute point of interest and created a flip. Remember the flip? We get a point of interest reaction, we form an extreme, we create a failure of the point of interest, and then we come back to mitigate the extreme. And so what do we get? We get a reaction to the equilibrium of the point of interest. Price pushes down, creates an extreme. This extreme takes out liquidity, and therefore this is more valid. This has already liquidated previous structure that led into this mitigation. And then what do we get? Immediate injection of momentum that creates failure of the supply zone. Look at this. So this has now failed, and this is now a point of interest. If we're going long, this is where we're going to look for. Why would we not look at the extreme or the decisionals if, for example, this would be the extreme, if it's unmitigated? Well, because we just created a reaction to supply. There was an interaction between sellers and buyers. In this case, we saw that the buyers came into the market around this zone and created so much momentum that it broke out and took out the supply. Therefore, a supply chain or a demand chain is now forming here. This is where we had the injection of momentum of orders, of buy orders, that what came in last, right? So once we take out this level, we are now looking for an entry in this zone. What do we get? Price comes back up, mitigates a second 15-minute point of interest, pushes back down. Guess where it comes back to get liquidity from? The equilibrium of this unmitigated flip zone. This would have been a beautiful buy. Obviously, you could have taken a trade off of this. Now, this was a different session, so we're not going to go too much into this, right? But we knew that this was going to break because why? Well, this demand was responsible for breaking out of this zone. And so price, while it reacted very aggressively to this, and we did get a pullback that was almost 25 pips, the reality was that this demand zone had not yet been mitigated. It really hadn't. And so in this case, it was very clear that this would be a beautiful buy zone. That's what we got. You can see that this was now responsible for what? For taking out this supply zone. So this was another flip, right? Point of interest reaction, form an extreme. This is now the extreme. This one's been mitigated. This one's unmitigated, and what do we get? Now point of interest failure. We failed. We broke through in this area, right? And so this is now an untapped zone that we're looking for. So this was the 4 hour. That isn't necessarily relevant at this moment, so it's turned off. And now we have a new 15-minute demand zone. Now this is a very large area, right? 14 pips. And why am I not going to bring it just to the wicks, right? In many cases, we would do something like that on lower time frames. But the reality is we don't always need to come down to the equilibrium or to the extreme in the form of a mitigation, because sometimes we get the reaction we're looking for from somewhere up here, right? We don't necessarily need to come all the way down. And so it's good if you were going to create let's say if you're going to highlight a zone, you can highlight it like this, right? For the whole 15 minute. And then if you'd like, go ahead and create a refined zone within it. Refined zones are very important, and we're going to go over those in the same video on the 5-second time frame, because that's usually where I like to get entries from. 5-second, 15-second. If you follow my Instagram, Ezra Trades, you'll see on my Instagram stories almost every day that I am trading, I am showing my entries live. So these are not trades that I'm taking in hindsight. You'll see my actual entries on my Instagram story live as I'm taking them. Within a few minutes, you'll see my entries on a 15-second time frame, 5-second time frame, 1-minute time frame, whatever it is that I'm entering. You'll see my actual trades. So you know what my trades did before I made my trade recap, because if you follow my Instagram, right? So as your trades, if you wanted to follow that. So anyways, this is now an untapped, unmitigated 15-minute point of interest. So what do we have now? The potential formation of a demand chain. We have the first one. We have the second one, which has not been mitigated yet up until this point, right? So what do we get? Price pushes up. What do we have? We flipped from here. Price is pushing up all the way up here. Here you could, and I did highlight this zone, but I didn't want to confuse you with this setup, so this was not really relevant. We're focusing more on the extreme in this case. From here, we did get price push up to what? Another liquidity point of interest on the 15-minute. We have how many? 1, 2, 3, 4, 5, right? And these first two are below the premium. So these two are in discount. So we're not looking for shorts here. This one, however, is in premium territory, I believe. Let's double check with my 4 hour. This is in premium, in fact in premium. So you could be looking for valid shorts there. And I'm pretty sure a lot of people were taking trades off of that. I don't remember if I took a trade from here or not on that day. It's in my trade recaps if I did. So anyways, we got a reaction here, but what did we not do? We did not create a flip yet, right? We didn't have a flip necessarily where we broke out like in these two cases. Reaction, extreme, failure of the supply. We come back to mitigate it. We didn't get another flip here. Price reacted here and what? It respected this supply zone. We created equal highs here, so there's some liquidity stored up here. that we had not yet tapped. Price is then pushing down. What do we have? We're technically respecting this last reaction. This was the last reaction. We did get the mitigation here, but this could be potentially another flip. It's just not necessarily that this took any liquidity, because we all have pretty much equal lows here. So this could be liquidity, right? And so in a way, I would like to view this as liquidity that will come back, that will serve as inducement to come back to this zone. And that's what happens, right? So anyways, we did get a reaction here. What do you see? Price is starting to push back up. What do we have here? At this moment, that's when we take liquidity on the high side. This was the last push down. So if we do this, this was break of structure to the downside. From here, this is the source for a break of structure to the upside. Now we have officially what I would consider a change of character. So now we're showing bullish intentions, and this is the area that we're looking at, something like this on the 15-minute, right? Let's get rid of this one. So what do we do? This, I did actually think I took a long from here in one of my trading sessions during this day. You can see price came up, rallied here, and what did we do? We did not take out this supply zone. So in this case now, what do we have? I guess what I should do is I should move these, because we have one supply zone that was respected. We have a second supply zone that was respected. So what we're basically creating here, let's add another one here, 4, is a supply chain. And so we have this untapped demand zone, right? That's a second one. But by the time we come to tap this, we've already done 1, 2, 3 supply zones that we've respected. We have two demand zones that one we've respected, one that's untapped. So at this point, a lot of things could be going through your mind. You might have a short bias because you are seeing, well, we are in premium territory. We did respect a 15-minute supply zone. We're respecting a second supply zone, a third one, a fourth one, right? And so this is kind of where we might not be sure in what direction we're going to take. So while you can take a very aggressive trade, a sniper type of entry, which is what we did, and that's what this video is going to be about. We took a sniper-like entry to a safe place, to where we were comfortable taking profit. Now, we very well knew that we could be wrong, right? Or that price, we could be right and trade with the higher time frame intentions. What we're basically doing here is we're accumulating orders to take long, right? And so the idea here is, if we see so much liquidity being built up, that's kind of a sign that more than likely that's what we're going to take out, right? And we did have liquidity being built up here, right? We have some liquidity here, we have liquidity here. There's a lot of liquidity that we could have taken on both sides. And so that's what kind of made it a little bit harder to really pick your direction. So once we get to here, we have another mitigation, price pushes down. This one breaks internal structure, right? So this low pushed price up, did not create a new high, therefore it's weak, swept this level, took out all the internal liquidity here. And what did we do? We got a somewhat of a mitigation on a 15-minute time frame. Normally, many people would have liked to see something more in the equilibrium zone before they would be comfortable taking an entry. And I agree with you. That's what I would have looked for as well, right? But sometimes we don't always get that. The market doesn't always do exactly what we want or show us exactly what we're looking for. And that's why you have to be quick on your feet and be able to react and adapt to changing situations, right? And so let me show you how I got the longs from here, right? So anyways, we got somewhat of a mitigation here. At the same time, we have some relatively equal lows, 15-minute time frame. What do we get from here? This is where price starts to build up orders, rally up. And from here, we very quickly got an instant reaction. Didn't last long. This was during Asian session. So many London session traders would not have been able to catch this trade because this happened several hours before the London session opened, right? So most of us would have missed out on this trade anyway. Even though it was beautiful, there really wasn't too much opportunity for entry unless you took the 15-minute supply zone. Had you taken a short from here, you you definitely could have set a risk entry to do something like this. Again, I'm not a fan of risk entries, but you could have taken a trade like this. Now, probably what we would have been hoping for is to get a deeper mitigation and that this would have been liquidity, and we would have had a trade like this. It obviously never would have, come to fruition, and so we would have been wrong. We would have been stopped out unless you took profits somewhere in here, right? So that wasn't the play, right? We're looking to see what price was going to do on a lower time frame, right? So when we got this reaction, we pushed price back down. My thoughts were, okay, we're in this zone. We've reacted. We're forming a demand chain, but we also have a supply chain. The reality is both sides are weak, right? This did not break the supply zone. This demand was in control, respected supply. Supply is now in control. Supply is pushing price down. What do we get here? A mitigation on a 15-minute zone. This is now demand is in control because we respected the zone. Price is pushing up, creates another demand zone to be paying attention to. Price pushes up into the second part of the supply chain. We respect the supply chain. Now supply is in control, right? Therefore, what are we going to do? We're going to target the initial push up because this is weak. We end up building equal lows, signaling a further push down. We still have an unmitigated demand zone. Price comes back up, creates a third mitigation, a third addition to now a developing supply chain, takes the liquidity from the downside, mitigates this untapped 15-minute second demand zone. We now have what? A demand chain that's forming, that's confirmed, right? Somewhat mitigated here. Pushes up. We get a fourth. We respect for a fourth time the supply chain. Price pushes down. We now respect the demand zone for the third time. So the reality is, we were just compressing smaller and smaller each time. The reality is price was going to explode with power, whether it was going to go up or down. And so the safe thing that we could have done is if we're going to take longs, let's take long up until the expected order flow is to reverse, right? Or if we're going to go short, let's trade from here to, potentially to a demand zone that might hold, right? And that could have been a good counter trend setup, right? But let's get into what we actually did, right? So here I took a note, if demand holds, we're taking the supply chain. Well, we've gotten a third respect of this, and that's exactly what did happen. Let's go on to the 1 minute time frame to show you the sauce, the 1 minute time frame and below, the really good stuff. All right, so let's see. I want to get into the refined aspect of this. So let's zoom out a little bit here. When I turn on my refined markups, you're going to see a couple things pop up. You're going to see this zone right here, and then you're going to see a little bit of markups on both sides. Let's get into that. So let's start on here, right? So what I was looking for was, okay, the price has been pushed up to here during Asian session. This was the reaction we got during Asian session. We had liquidity all in here from Asian sessions, right? What I wanted to look for was untapped, unmitigated zones, because what happens is from here we had this mitigation, price pushed down, and this, I wanted to see where the change of character occurred on a lower time frame on the 1 minute during the initial tap to this unmitigated, previously unmitigated demand zone, right? And so if I was looking at the chart here, there's a couple things I could have looked at. Right here we had, this one took liquidity. This one technically could have been unmitigated, right? Price pushed up here, took out some highs in here. This was the last time that we had a push with structural liquidity that was being built up, where we got an official change of character on a lower time frame. I checked this out. I think it was on the 5 second. Let's see if we can see it clearly. Might take a second. Try to drag it all the way there. We're getting close. Here we are. Alright, so this is what I was looking at. And it goes back to here. Oh, we still have a ways to go. Let's just drag this back. Use the bar replay tool. I'm not really a fan of bar replay too much. It does mess up my chart sometimes. Alright. So here is where we got the last change of character before the rally up, right? So we did get a change of character previously. We got a change of character here. So this is where price started going long. But then what did we get? This one wasn't strong enough. We basically pushed price back down, and we got a change of character now to the downside, right? And so what I was looking for was, okay, the rally up, this is the push up, right? And if we continue going further, after this, basically price just goes up. And this was the last push up for Asian session where we had that push down, right? So what I was looking for was when we had the last change of character before the push up like this that we had here. And so what I was looking back, I was moving back, and here is when we were still going downtrending, we were still breaking the lows. This was, let's get it a little closer so you can actually see. We took out the lows here, price exploded back up, came back down very quick. You know, we tapped something in here. We got a reaction. Price came here. This was the last, I would say, a lower high before a lower low. This was the lower low. Then price started building up liquidity, and then did what? Took out one level, took out two levels. We officially took two levels of structural liquidity here, and therefore I'm now looking for longs here. Now what you could have done is said, okay, well, let's, you know, the entire zone here like this, right? But the reality is that on a 5-second time frame, this is where we had the last move from. Look, right here. This was the last down before up, and this up took out liquidity and swept and just continued to push up. Then we came back down here. What did we do? We mitigated something here on a lower time frame, right? But what do we have? We still have untapped this zone. So on the 5-second time frame, this is an untapped extreme. This was the last down push before the rally up. And therefore, I wanted to see if we could get a reaction from here. This was going to serve as inducement for me for later. And if we now go to the 1-minute time frame, you can see what? This was the last extreme where we got a change of character before price rallied up. After that, we didn't get any more pushes down. So this was the very extreme. Here we still had price go short, but from this moment, price only ever went long until we ended up coming to a mitigation to form the supply chain, right? So that's something that I was looking for. It was a 1-minute refined zone. So let's drag this out across. And therefore, I wanted to see how price was going to react to this zone. Drag it across. It's a little small, so it's hard to drag, but there we go. Perfect. And then, now that I got onto the charts around this time, this is what I was looking for. I was waiting to see if we were going to come down to what? To get a deeper mitigation into a 15-minute zone, or if we were going to react to this unmitigated, untapped 5-second demand zone that was responsible. It was the last push down before we got the rally up that created the last supply chain mitigation that we are now targeting to take out, right? And so what do you see? We respected a 5-second zone. This is about under half a pip. So that's how small it is. And this is kind of a trick that you should look for. When you are looking at 1-minute zones, 1-minute extremes, you can usually go down to the 5-second or 15-second to find where price was engulfed, where is the last buy to sell or sell to buy candle that was engulfed, because that's usually where price will come back to mitigate or respect. And so not necessarily am I saying let's set a trade here and then just, hope it respects. I wouldn't do that. I mean, obviously that would be ridiculous in terms of RR. I mean, with a half pip stop loss, even 1 pip is a 1 to 2. I mean, 10 pips is 20R. That's insane. This would be amazing, right? But the reality is you don't know if it's going to hold. It's unlikely that it's going to hold because I was still looking for deeper mitigation on the previous 15-minute zone. We just had a somewhat of a mitigated zone. And therefore, in this case, for me to be sure is like, okay, well, instead of just hoping that it's going to hold and waiting for a regular change of character, I want to see that it gives me a reaction off the very, very most extreme. This is the last 0.4 pips of the down move before we got the rally upwards, right? Just again to show you what it looked like. This was the very last push down before price officially started rallying up and created all this longs, right? So instead of targeting something in a deeper mitigation here or targeting liquidity here or, a bigger zone, I wanted to see, is it going to respect and hold this zone? We did create structural liquidity there that we were going to sweep, and that's, we did sweep it just to come in to tap to that zone. So let's get back into this. I'm going to show you now my entries and how I took them. All right. So what am I looking for? I'm looking for a respect of this demand zone. I'm now looking for a change of character, and I'm looking for flips because I want to enter after a flip to be really safe, right? And so what do we get? Price comes in, taps the top, but this is the deep mitigation into the 50, the equilibrium, the 50% of this 5-second zone. And this is when we get a change of character, right? Because look, this is a push down, right? This made this low, new low. Price pushed back up, respected this high, tapped the supply chain, pushed down low, made a new low. This was now the lowest low in this move. And then this is when price pushed up with impulse. Momentum was injected in this exact moment into the market. We got a change of character, and here's what I like to see. I like to see 2 points of structure broken. This was a low that pushed a new low, low that pushed a new low, low that pushed a new low, another low that, these are highs that pushed new lows. So lower highs, right, is what I'm saying. Each one of these pushed deeper. But we took out 2, 1, 2 with this initial push. And therefore, at that moment, I wanted to look for longs because we respected this 5-second demand zone. We got a change of character. And if I'm going to be wrong, it's because we're not supposed to go bullish. We're going to go bearish. And so I was very confident that this move was going to hold. And that's how I found this entry. Let me show you the actual setup here. So on a 1-minute time frame, and you can do this on the seconds, but on the 1-minute time frame is enough for you, right? So let's say this was a down candle that came in to mitigate this zone, created this extreme that pushed price up. So we now have this leg up. This is the extreme. And therefore, what am I looking for? I want this to be respected. If price explodes with momentum here, takes out structural liquidity, and then runs back down, then we're wrong, right? But more than likely, we saw that something was entered into the market at this moment. There was momentum injected into the market. This more than likely will have to hold. And if it breaks more structure, then that's further validation that we're looking for continuations, right? So this was a demand zone. Price took out points of liquidity. We did come into here and we pushed back down, but we still took out these levels. I'm now looking for a long here. So here's my entry 1. Let me show you. Here we go. And this one's at the 25%. I do believe that I think I entered this on a 15-second time frame, so it's a little bit lower. But if you use, let's say, a 50% or 25%, let's do this. Where's my entry tool? 25%. I think it's the all. Actually, I used the fib tool, that's why. We're going to click 25%. Perfect. So this entry was at the 25% that I set it. It did come to equilibrium, so that could have cut my stop loss even further. This was a zero point 0.8 pip stop loss, right? So, less than a pip. That's pretty crazy. But look, it respected. And not only did it respect, but from this, we got a reaction that did what? Broke structure to the upside. Now we're taking structural liquidity, right? This is a high that we previously just made that took out these levels, respected something in here, came back, mitigated. This mitigation created more impulse moves up that took out to this level. We now have a new high on a 1 minute time frame. We might be officially switching to bullish order flow. So that's what I'm looking to hold. So now I'm going to show you my secondary setup. Once again, same kind of thing. Look at the difference here. We have the last down close candle that pushed down, that mitigated into this zone. This is the extreme, right? Now what can you do? You can set an order for equilibrium or for the 25%. Let's say we do the 50% here. You would have had a less than 1 pip stop loss. Would be insane, right? You don't necessarily need to do that, especially if you're on a 1 minute time frame. Sometimes you only have a few minutes to react, right? So from the moment that the high went, you'd have about 6 minutes before you have price already coming back into here. So if you have less than 5 minutes to react, which might sound like a good amount of time, but you have to really, when you start to see this happening, you come back to the higher time frame. You're like, okay, well, is this going to switch up? Where am I targeting now? What's the next move, right? So you got to be quick. So let's go to show you what my entry looked like. That was my entry. So entry number 2, right here. And this was I took it with a 1.9 pip stop loss. Of course, I could have narrowed my risk to half that and had a 1 pip stop loss, but 2 pips was perfect for me. Not a worry. I was ready to take this because guess what? I took a 0.8 pip entry here. I'm fine with 2 pips. I don't want to be greedy. The risk is the same anyway. And then what am I looking for? Price comes up, rallies. What do we get here? A reaction. And then this reaction pushes down, takes liquidity in here. Doesn't take out this low though, right? But creates what? We have a down close candle, an engulfing candle in here. And this is where price tapped something that basically injected much more momentum that finally broke out from this level. We now took another high, and now we're looking for another entry, right? You don't have to take entries. You could be happy with, taking one of these. You didn't even have to take the first one if you were unsure, right? Some people might say, well, I'm waiting for double confirmation. That was 1. This was 2. You could have looked for a third one, or you could have taken this one. I took all 4 of these, and that's what we're going to break down today, right? So let me show you my entry setup. What do we have here? We have a flip, right? Now, is this an official flip? In a way, yes. This didn't break structure to the downside, so I'm not necessarily looking for this to be a very strong level. But more than anything, we got a reaction from here. This reaction pushed price down, and so this is now the level at which I'm looking for to potentially get another entry. Now, here's the trap that you could fall for, right? This could also be liquidity. And if this was liquidity that we were just going to target later to come back down to what? Come back to an extreme, that very well could be the risk, and we could just come back to mitigate something in here, right? And so you do have that risk with this entry, right? Now, I took it because I was very sure we got a strong reaction to this level where I already have 2 trades in. I'm fine to take a loss if this one gets liquidated because I already have 2 trades in, and I know this is going to be a very high RR trade. I have one with a sub 1 pip stop loss, I have one with a 2 pip stop loss. If this one gets stopped out, not a big deal. The risk is going to be the same. And I took with almost a 3 pip stop loss this setup. This was a 2.7 pip stop loss. I almost never trade something more than 2.5 pips, but I was confident in this move and it did play out. So what do we get? We respect this level. At this point, what do we have? we now have order flow just basically ranging in this price, where we're basically respecting this level, but at the same time, I'm thinking, well, we are likely that we could liquidate this position, and I have to be okay with that, right? You don't want to just get out of a position because you're scared or you're worried that, you know, price is going to take you out. It's part of the process. We always are going to take a couple losses, but the reality is you're going to have more wins than losses if you follow a good trading plan and you trust yourself, right? So anyways, what I'm looking for at this point, see, did I draw this out? What I'm looking for is for this high to go. If this high goes, then I'm going to feel safe that this is a good entry. If not, price could very well just be, you know, creating some corrective liquidity to come down somewhere in here before it rallies up, right? So what I'm waiting for is I want to see another impulsive reaction, a stronger reaction out from here. Now at this point, it's midnight my time. So we're still 1 hour away from the official London Open, right? At London Open, we already know that we're going to have a massive injection of momentum. Price is going to be more aggressive, and it's going to either take out all of my levels because I'm either going to be wrong and I'm just liquidity, or it's going to move with me in the market. And I already have 3 entries before London Open that I think are pretty strong, right? And so London Open is about 1 a.m., which was right here. This was the moment that London opened, right? And at this point, we're ranging, and we're kind of, looks like we're pushing down a little bit, right? We're taking out some lows here. We have a newer low in this range. Price is pushing up. We're kind of respecting this levels. This one, we came up, did not take out this level, respected. So I'm thinking at this moment, there's a good chance that I'm about to be liquidated from my 3 positions. But let's be patient. Let's see what's happening. Psychology is very important in trading. One of the most important thing, you have to have confidence in your setups. Trust yourself, right? So let's see what happens. I'm looking for a setup. Let's go to entry 4. Then I see what? Look at how price was basically, we have a push up, push down, push up. We've created some sort of order block. There's a range in here. This is a 1 minute time frame, but there's a range in here. And from here, price explodes up, takes out my level, breaks structure. We now have a new high. And now that means what? Well, this low should now be protected, because what are we doing? We're protecting the lows, targeting the highs. Protecting the low, target the highs. High, this is the low, takes out the high. This should be protected, right? So we should continue this. We're on a 1 minute time frame. Momentum can move really fast in a minute and take everyone out. But this is what we're expecting. Now, why did I pick this low and not right here? If you took it like this, you could have gone taken out, probably by spread, because this was 0.2 pips, right? But the reality is that, well, this didn't take out any liquidity, but what did? This tiny little wick did. This tiny little wick took out liquidity. It created a reaction. Now, what liquidity do we take from? If we draw this out, look at this. We have this area that created what? We have price here that created the same kind of move, very impulsive in here, a small range on a lower time frame. Price came down, mitigated something in here and pushed up, took out this push down that took liquidity, right? So let's really get clear with this, right? So I want you to see this. So this was responsible for creating a new low on this range. It took out liquidity. Therefore, this should be protected if we're going to go short. What happened? Price here reacted, pushed up, created a range on a lower time frame in the seconds, and took out this level. So this is a point of interest that we might be looking for, right? Something could happen here. Now, what do we get? Price pushed up, came back, mitigated something in here. This was probably like the 30% of this move on a lower time frame. Doesn't necessarily have to come lower. And what do we get? Another push up. So from this, we're basically chotching up, which change of character upwards, right? We're now pushing more of a bullish order flow. Now, anyways, if price came lower, this move is still protected because my stop loss is down here at 2.7 pips, right? So I'm not too worried. But when I saw this move happen, I was ready to take another entry, and I took the whole range here. And let's show you what my entry looked like. Setup 4. This one, I believe I took it at the 25% to cover this low. So I think what I did is, instead of just, trading from up here like this, which would have been stopped, I just covered the low and I just moved my entry a little bit lower to get the same. This was a 1.5 pip stop. And then what do we get? Once again, you see that we're creating liquidity here. I remember looking at this on the 15 second. Where are we at? Sorry, when that happens, it's a little confusing. Here we go. So on the 15-second time frame, we're seeing a very corrective manufactured liquidity pushing down. And you see how powerful the push up was here. That basically what we looked at is this is the actual point of interest on the 15-second time frame. That's what we're trading from, because this is where we had the last engulfing that took liquidity from here. If we go down really to look at this, check this out. So price here pushed up. This took out liquidity from this push move down, right? That mitigated something there. This elicited a reaction that took out this push down. So this is creating the bullish order flow. This is the move you're looking for. Price pushes up, takes out, comes back down, mitigates. What do we have? Price pushes back up, takes out this high. This is where we get the official change of character. So had I wanted to, I could have taken a trade like this. It would have been crazy, and I don't do that all the time. But that would have been another 0.8 pip stop loss, right? Now, I could have been wrong. Price could have just came in to tap this zone, which also is likely. But instead of coming to this decisional, it came to the extreme. And that's why we did well on this trade, where we did just fine, 1.5 pip stop loss. After price came here, it took out this level. And we are now safe here. We now have 4 entries that we got on all different time frames. Let's go back to here. We have 4 different entries, beautiful entries, and what are we targeting? Well, if we look at the 15-minute zone, once again, just to get the targets, what do we have? We have a demand chain that is now officially holding. We entered off a 5-second untapped, unmitigated demand zone that was respected, created a change of character on the 1-minute time frame. That 1-minute change of character created multiple flip opportunities and multiple mitigations that allowed us to capture 4 different entries. And what are we going to target? We could do 2 things. To be safe, we could target this 15-minute supply, and that's what I did, because I wanted to play it safe. If I was going to be wrong, I wasn't about to have 4 trades go to waste on me and lose them if price would just turn back around very aggressively like it did earlier. What did I do? I targeted the last push up. Let's do this. The last push up. Let's turn this into a dark supply zone. On the 15-minute, this was the whole 15-minute zone, but this is where I entered, or I was targeting. This was the last push down before we got this push up, and this was the area that was engulfed. And therefore, to play it safe, I was going to exit at the 91, about there, right? And that's kind of what we had here, right? Now, what could we do? If you watch my other videos and I tell you, you can take profit, and then what can you do? You can leave some runners so that you're always part of the larger move. That would have been great. In this case, it's the holidays, and I wanted to sleep at the same time. I didn't want to be in trades while I slept, and therefore I was very content with taking profit. So I automatically had a TP set right here, and as you can see, we caught several trades. Just to show you what those trades look like, we have a setup. So let me show you what they look like here. These are to show you the numbers of the RR. Now, here's what we could have done. We also know that the 4-hour zone was unmitigated, right? And so, at the same time, what are we looking for? The extreme to be tapped. So this was a whole 4-hour. This was the last unmitigated extreme, and therefore we could have very easily just taken that as a target. And had I just allowed these to continue to run, because look at how aggressive this was. London created the move, right? A little pre-London created the entry, and London and New York just took this to the moon, came to mitigate this zone. Had we had those trades taken, instead of the ones that I took with my take profits, what we could have had is we could have had over 200 R. This is what our trades would have looked like. And that's the thing, is that would have been beautiful, and it's realistic to take trades like that. Very realistic, because all we did was, what did we do? We took a trade from a 15-minute demand zone that was holding. We saw, and this is the power of supply chains and demand chains. A demand chain was forming. We had an untapped 5-second extreme in a demand zone. We tapped the 5-second. We respected a 5-second extreme. We got a change of character, and we entered off of flips and several unmitigated zones that were responsible for breaking structure to the upside. And you could have had over 200 R. Now, do I feel bad that I missed out on that? No, I don't really care. 200 R is great, but so is 60 plus R. And so for me, I've had one of the best months that I've ever had trading. This month already, I'm already way over 200 plus R in the month, and month is not even over, and we have holidays, right? So what did we actually end up getting to tally it up? Let's make sure we get all of our entries on here. We had the first entry was the best one, at 8 pip stop loss, 0.8 pip stop loss. This was a 32.75 R trade that had the potential, had we targeted the 4-hour zone or the untapped 15-minute at the very, very top, this would have been a 96 R trade. Beautiful. Then we had a 1.9 pip stop loss. Let's just say 2 pip stop loss. It was a 12.95, about 12, almost 13 R. That would have been 37.7 R, right? Then we have, this was a pretty big stop loss, right? A 2.7 pip stop loss that held very clean. You know, it was a really nice trade. Didn't need to take it, but that was beautiful. This one was a 7.48 R trade that would have been 26 R. And then we have this last one. This was totally textbook. Beautiful trade. This was a 1.5 pip stop loss. It was a 12.6 R trade that ran to 46 R. And so to tally this up, we have over 200 R, you know, if we held all the trades, you know, to the 4-hour, or very happy over 60 R in one trading day, in one trading session. From entry to exit was less than 3 hours. How are you going to make over 60 R in less than 3 hours? That's insane. So anyways, I hope you enjoyed this video. I'm glad that you watched this one. I do think this is probably one of the best videos I've made up to date. I don't always go on the seconds time frames, but this one had a lot of sauce, a lot of gold nuggets. I hope you understand the power of developing supply chains and demand chains. Pay attention to unmitigated extremes. Don't be afraid to check out the seconds time frame. It's crazy what you can find on there. And good luck. Merry Christmas. I hope that you have an amazing next year trading. So enjoy. Bye.